Before worrying about your education loan interest rate, you need to understand how this increasing in repo rate is affecting your education loan interest rate. Now, to understand that better, let's go back to the basics. Banks and NBFCs are actually not supposed to alter the other components once they sanction you the loan. But the reality is many of them do alter that. Especially many students ask me that, does my education loan interest rate directly changes with the increase in repo rate? At this point in time, if you shift your loan to a US dollar loan, apologize for my language, but you will be screwed. Hello all, this is Damini, co-founder of VMEX Scholars. I welcome you to the 41st episode of our web series LoanFlix Season 2. RBI has increased its repo rate multiple times over the last 6 months, which means the interest rates of all loans are increasing with this change. Many students are worried because of this, because their cost of funds is going up month on month. So in this video, I'll be discussing the following topics. Number 1, how a repo rate is a component of your education loan interest rate. Secondly, does the increase in repo rate directly increases your education loan interest rate? Thirdly, if your loan is approved before the RBI changes the repo rate, does it still affect your interest rate? And lastly, in this market scenario, is there still any possibility for you to decrease your education loan interest rate? So let's start. But before that, for those of you who are new to my channel, let me tell you, LoanFlix is a web series which covers each and every detail of an abroad education loan. Right from the process, eligibility, sanction process, disbursement process, repayment, each and everything. And LoanFlix is an initiative of VMEX Scholars. VMEX Scholars is an organization which is funded and supported by the Ministry of IT, Government of India. And its sole purpose is to help students like you get an abroad education loan or funding in the form of scholarships. And all the services of VMEX Scholars are completely free of cost. So you can get in touch with our team and seek any help with respect to your education loan without any second thought. I'm leaving the link in the description through which you can connect with the team. So let's start. So now, before worrying about your education loan interest rate, you need to understand how this increasing in repo rate is affecting your education loan interest rate. Now, to understand that better, let's go back to the basics. So education loan interest rate has 4 components. The first one is the base rate, which is directly affected with the repo rate. So it is a bank specific rate. Now, plus to this, you have spread. So now spread can be different for every bank, and within the same bank also the spread can be different from one product to another. So for example, it is possible for one bank, the education loan spread is 2%, whereas the spread for general loan against property is 3%. Yeah. So in addition to the spread, you add the standard premium or the risk premium. Now this, not all the banks charge it, some banks only charge premium. Now, on top of this, you have to minus all the concessions and discounts which the bank might be offering. So now let's break down the interest rate of SBI, the current rate for its abroad education loan scheme, Global Advantage. I'll show you all the components. So now SBI's base rate as on today is 8.55%. Now this base rate, again I'm mentioning, is directly dependent on repo rate. So if repo rate increases by 0.5% tomorrow, this base rate, which is EBR, SBI calls it external benchmark rate, will also increase by 0.5%. Yeah. So 8.55 is the figure as on today. On top of that, the spread for Global Advantage scheme, which is the abroad education loan scheme, is 2%. Now SBI doesn't charge any premium, so I'm putting 0 here. Now on top of this, you need to subtract. There are 2 concessions which bank offers in terms of education loan. Firstly, it's 0.5% for loan insurance and 0.5% for female students. So let's say that we are doing this calculation for female students. Now I'm putting here 1%. So this gives us the final interest rate for female students in SBI as on today, which is 9.55%. Now, why I told you this whole story is for you to understand that only base rate is the component which is impacted by the change in repo rate, whereas all the other components stays unaffected. So now banks and NBFCs are actually not supposed to alter the other components like your spread or any other premium, etc. once they sanction you the loan. but the reality is many of them do alter that, especially NBFCs. They do these false practices by altering spread and other components of your interest rate after your loan is sanctioned. But if you are taking your loan through VMake Scholars, you need not worry about that, because we offer you this loan interest rate protection scheme, which protects your interest rate against any change or any alteration in any component, other than, of course, if RBI changes its repo rate. But the spread and things like that will not be altered at all. So you can check my detailed video on loan interest rate protection scheme. The link for the same is given above. Now let's talk about the base rate part, which banks are officially allowed to change even after they sanction you the loan. So for that, let's look at RBI's repo rates last 1 year history. So 1 year before from today, in September 2021, the repo rate was 4%. So it stayed at 4% for a very long time. And then this year in May 2022, it got increased by 0.4%, making it 4.4% in total. Again in June, it got increased by 0.5%, making it 4.9% in total. Again in the month of August, it got increased by 0.5%, making it 5.4% in total. And now finally, again in September, it got increased by 0.5%, and the repo rate as on today is 5.9%. So as you can see, the repo rate has gone up by 1.9% in the last 6 months, making it an increase of 190 basis points, which means all the floating interest rate loans, like be it home loan, car loan, education loan, anything has gone up by 1.9% for all the banks which were offering floating interest rate. Now, just a little twist in the game. Many students ask me that, does my education loan interest rate directly changes with the increase in repo rate? For example, 0.5% went up there, immediately your education loan interest rate went up by 0.5%. So the answer is yes, mostly, but sometimes no. So in my recent conversation with one of the senior officials at one of the large PSBs, I was told that the banks sometimes can absorb this increase in repo rate by reducing their profit margins and eventually not impacting the final customer. So for example, if RBI increases its repo rate by 0.5% and the bank feels that they can take a cut on their profit margins of 0.5%, if they absorb that thing, the final customer will not be impacted in any way in terms of interest rate, even though the repo went up in this example, right? But for your information, until now, all the banks, be it a private bank or a public bank, had been passing on this increase in repo rate directly to their customers. But some of the NBFCs, they have decided to, absorb some of this increase. So for example, one of the NBFC we work with, what they have decided to do is that, instead of increasing the final customer ROI by 1.9%, which was actually the increase in repo rate, they have actually increased the final, for VMake Scholars customers especially, they have increased the final customer ROI only by 1%, and the remaining 0.9% they have absorbed it in their profit margins. As we are the largest partner for the banks and NBFCs in India, contributing about 25% of their all education loan applications, we are generally given such special offers. So as of now, we had been able to convince only NBFCs to get this special approval wherein, they will not increase the interest rate proportionately when, the repo rate increases. So this benefit can be directly passed on to you if you apply for your loan via VMake Scholars. So the average interest rate of VMake Scholars applications are at least 1% cheaper than the average which the NBFCs or private banks have for the direct customers. So which means if you apply for your unsecured loan via VMake Scholars, your interest rate for sure will be lesser than the interest rate you will be offered if you go directly to them. So to get in touch with VMake Scholars or to start your loan process, you can click on the link which is mentioned above. Another question which we have been commonly asked is, if my loan is sanctioned before RBI announces its repo rate increase, will my education loan interest rate will also be impacted with this change? Now, I have seen many students feeling very happy also that, I got my loan sanctioned a day before RBI announced its repo rate increase. So they'll be like, hey, narrowly escaped, very happy, until we tell them the truth. So the thing is, as per the terms of your loan sanction, the interest rate is on a floating interest rate basis, which means whenever the base rate changes for the bank due to increase in repo rate, your overall interest rate will go up proportionately. I know this is sad, but there is a good news. As the RBI repo rate had been increasing for the past few months, the market is expecting it to be stabilized soon. And as soon as the inflation is under control, the repo rate is expected to go down. And the good news in this is that as your loan is on a floating interest rate basis, when the repo will go down, your interest rate will reduce as well. Coming to the last bit of this video, my team of financial officers has been asked by many students if they can do anything at this point in time to reduce their education loan interest rate. So the answer is yes, it is possible to reduce your education loan interest rate by transferring it to another lender which has an overall lower interest rate. Now the overall lower interest rate might be due to the overall lower spread that the bank has, or it might be due to that the bank absorbed some of the repo rate increase to keep the overall interest rate on the lower end. So whatever might be the reason, there are always options of lower interest rate. So you can talk to your VMAX College financial officer to know more about it, but in case let's say you do not have any other lower interest rate option, they will definitely give you that clarity. Now, when you're thinking of loan transfer, please never think of transferring your loan to a foreign lender. US dollar is going up against INR drastically on a month-on-month basis, and at this point in time, if you shift your loan to a US dollar loan, apologize me for my language, but you will be screwed. Watch my latest video on IMF's report on US dollar loans. The link for the same is given above. That's it for this video. If you have any questions, feel free to put it in the comments section and I'll definitely get back to each one of you. If you appreciate the effort we put in to do this research and bring this information out to you, then please subscribe to our channel and like this video. And lastly, if you have any questions and you want to talk to VMAX College financial officer regarding your abroad education loan, you can get in touch with us using the link mentioned above. And please note that all the services of VMAX College are completely free of cost. Stay tuned for my next video. See you then.